Hi there, Serial Trader here. I just want to do a check-in with the major US indices, and of course starting off with SPX and looking at the Elliott wave count. Now in the last video I went through some bigger picture scenarios and some longer term wave count potentials, but in this one I just want to focus on the short-term action and not get married to a longer term outlook, just to try and avoid having any kind of directional bias because of that wave count, and just focus more on the shorter term trading implications. So that's what I'm going to do here. Now from the top, I believe in the last video, very little of this pattern had developed. It was about a week ago. But I think from the top, the all-time high, we have a pretty convincing 5-wave decline nearing completion, although it still looks like it needs one more leg down after this potential 4th wave up to complete either a larger wave 1 or wave A, which would, if we get that last leg down without overlapping up here, that would change the trend of one larger degree to down, meaning that we either have a 1 or A down, then we'd be looking for a 2 or a B up, and then at least a C down, if not a 3, 4, 5 down. But just to focus more on the short term, so 30-minute chart SPX. So from the top again, we have a 1 down, 2 up, then we have a 1, 2, 3, 4, 5 of 3, and you can see we didn't have overlap here. It respected the rule. So this was the termination point of 1 of 3, and that was at 2898.2. Now the termination point of 4 of 3 was at 2898.0. So it got real close, but didn't actually overlap, so it respected the 4-1 overlap rule. That gave us a nice clean 5 down for a wave 3. And certainly the length of wave 3 compared to wave 1 suggests that it is a 3rd wave. And now that we're looking for a 4th wave bounce up, and then after that, at least one final move down to complete that larger 5-wave sequence. And then at that point, looking for a more significant corrective bounce upwards. So what I've done here is this horizontal yellow line. This is where we would overlap this wave 1 with this wave 4, which would invalidate at least this interpretation. It wouldn't necessarily change the directional implication much, but it would force a reevaluation of the wave count at least. So that's the 4-1 overlap for this degree of trend. So we have to stay below, at or below 2900.5. So anything below that would be acceptable for this wave 4 retracement that we're currently in by the looks of it. Now just a few things. We have this base channel I've drawn, and you can see just connecting the termination point of wave 2 from the origin of wave 1, and then in parallel off of the termination point of wave 1. And you can see we've broken down cleanly out of that. That's kind of a visual confirmation that 3rd wave price action has taken place. And now, ideally, that'll serve up as some resistance, at least a resistance zone for this 4th wave that we likely are already in here. Now, I also have some retracement levels. So this is the retracement of this wave 3. And we have the 382 retracement and the 50% retracement. So this is kind of a zone to watch for. And then also, if we go a little smaller here, or I should say smaller degree, we're likely working possibly an ABC up for this 4. And let me drop down the degree appropriately for that. So we got the A, we got the B, possibly starting the C here towards the end of the day, and just some relationships there. So we have the 618 relationship between A and C projected off of B, and the equality. Equality gets us just under that 4-1 overlap area. The 618 just basically goes in between the 50% and the 38.2% retracement, and also right around this base channel, looking to act as resistance ideally. So that's short term what to be looking for here. And I'll just draw the corrective channel here, and perhaps we come up here and resist off the median line in this kind of confluence of resistance, and all while ideally not overlapping that horizontal yellow line there. And again, that level to look for is 2900.5. So if we can get up here, start stalling out, start coming down, that's a pretty decent entry, at least for a short trade, to catch this fifth wave down. And the stop obviously goes, just above that level where it starts failing at, as long as we do that before we overlap. If we overlap, I'm going to have to rethink the wave count, but so far it's working. So run with it for now. All right. So that's kind of the shorter term wave interpretation. Again, I don't want to get into the longer term count or what this would imply, but it would certainly, if we do successfully not overlap here and get one more leg down to a new low, that will be a pretty high confidence trend change of at least one larger degree. So implying, at least on some level, more downside to come. It may not be substantial, or it could be the kickoff to something very substantial, but we don't know yet. So that being said, we'll go to the Thinkorswim candlestick chart. So I think in the last video I pointed out this bearish engulfing candlestick, and obviously the high of that, which is the all-time high here, that had to hold to be valid, and that engulfed, I believe, 5 prior candles. So it was certainly a powerful reversal signal, and it held. We got up as high as 29.47. So we certainly tested that high, but it failed to make a higher high. We made a lower high. Started coming down here, and now we've convincingly been closing below the daily T line and also the 3 T line, kind of showing some more bearish short-term strength here. And a little bit of a reaction, it seems, off the 50-day simple moving average today, and we did a bearish hammer, a bullish hammer candlestick, which certainly implies a little bit of upside here, at least maybe back up to that T line or close to it. And that would certainly, if I go in here on this 10-minute chart, that would certainly fit well with our interpretation that we have an A up, B down, and we need a C wave up to complete that wave 4 that I pointed on the wave chart. So a little bit of upside possible here, certainly implied by the candlestick as well. But ideally, it just makes another lower high, and we continue down at least one more time to take out this low. That was 2836.4 to finish at least the initial leg down of a larger downward move. Now, okay, what else here? On the weekly, now the week isn't finished yet, but looks like we're possibly going to be getting below that weekly T line. If we can close below it, that'll be significant, because we haven't done that, basically since this very significant uptrend has been in force. So yeah, that will be a notable technical event if we close below the weekly T line. And you can see the weekly oscillator stayed overbought for some time, but now starting to come off that overbought condition. So that's a little bit of a technical exhaustion there starting to show. Okay, so that's SPX. And what else here? So on the Dow Jones Industrial Average, similar, although as far as the technical breakdown, it's already more significant. We're already well below the 50-day simple moving average. And actually, at the low of today, we got not so far away from the 200-day moving average. So that'll likely at least be tested if we get another short-term leg down here on the Dow before possibly bouncing a little more significantly. But yeah, definitely bearish engulfing candlestick here on the Dow, and significant follow through, and very much in line with SPX as far as the directional implications. I don't want to get too far into the details. I don't really trade the Dow, but certainly good to look at it. The candlestick here on the weekly, again, if we can close convincingly below this weekly T line, that will be notable on the Dow as well, as we really haven't done that since this significant multi-week, multi-month uptrend kicked off here. So that's something to watch for. And again, coming off that overbought condition on the oscillator, that's some good confirmation there that something's changing directionally. Okay, so that's the Dow. And okay, go with the NASDAQ composite. So on the NASDAQ composite, directionally very similar. Although interestingly enough, we had that bearish engulfing candlestick here, and then it got invalidated, but then we started coming down anyway. So a little messier here as far as the candlestick picture goes on the NASDAQ. But the bottom line is still the same. We're still below the T line. Definitely, at least the short-term trend has reversed to the downside. Getting some support off that 50-day simple moving average. Starting to get closer to the oversold condition here on the daily. But largely it will move in the same direction as the other two indices. As the weekly goes here, let's have a look. So the weekly, we're just kind of hovering around the T line, maybe doing a weekly doji star, although tomorrow's close will certainly give more information here. But yeah, if we do close below the weekly T line on the NASDAQ composite, again, that'll be a significant technical breakdown along with the other indices. Okay, that's the NASDAQ. And let's get to the VIX, because something significant has finally kicked off here. So I said in the last video that the VIX really wouldn't be giving much of a signal unless we convincingly got above these two prior resistance levels, and that was at 1785 and 1833, basically the 18 area. So we've gotten above them, we've closed above them convincingly, and this really looks like a breakout here for the VIX. I mean, this is smashing through all kinds of previous resistance levels, and certainly changing at least some level of this trend. So VIX, if VIX is on a bullish breakout, that is not a bullish condition for equities. Quite the contrary, it's a very bearish development for the equity indices. So as long as VIX keeps up with this breakout, we continue to make higher highs and higher lows. And again, we're well back above the 200-day moving average on VIX once again. And if we look at previous times, okay, so here we got real range bound and subdued in VIX, and then we broke out above that 200-day moving average, and that certainly led to significant volatility in the markets for quite a period of time after that. So are we kicking off a similar condition here? Certainly possible. Certainly looks menacing here. Now on the weekly VIX, you can see the weekly candlestick we're working here. Again, see what tomorrow's close looks like, but this looks like a pretty significant move on the weekly as well. So we'll continue watching this. All right, now on the VIX VVIX tool, and let me just pull this up. This gave a signal over here, SPX sell signal. I think I pointed that out in the last video I did, and significant follow through. So VVIX, pumping up hard, VIX pumping up hard, and obviously SPX breaking down hard. Very much an inverse correlation. So definitely, as long as we stay below this, blue moving average, we can continue to have a bearish bias here, according to this tool. Sell signal still very much in effect at this point. All right, we'll see what tomorrow brings. Certainly some interesting, if you can call it, headline risk taking place right now with the China trade news and the tariffs and all this. But all that aside, the technical patterns are certainly giving us a clue that perhaps more downside is ahead. And again, before I end the video, just to quickly go back to this chart, the real trade setup here I'm looking at is setting some sort of lower high below 2950, and then starting to roll over. That'll be a nice little short-term entry for a downside move. That's kind of what I'm looking at from a trading perspective. After that, if we do get that final leg down, right? So if we do get something like this, get our little wave 4, come down like that, and make a new low below that low that we have at 2836. If we do that, then that would actually be a decent setup. Count a complete 5 down. We'd be very oversold on a short-term basis. That'd be a nice move to try and get long for a more significant corrective retracement upwards, right? And looking for something like this. some sort of ABC up for either a wave B or a wave 2. So that's a couple things to watch for. Immediately kind of scouting a bearish trade setup, and then still short term, but a little bit after this, we'd be looking for possibly a more significant corrective rally. It would be still worth trading, even though it is, quote unquote, a corrective rally. You could get a, I don't know, 60, 70 point move easily out of that. Just to do some estimations. So if we go down, just make a slightly new low. If we just do some fib retracement levels, and let me just pull up the, let's do the 618. That's a pretty common one. That'll get us to 2907. So if we went there from, I'll say 2830 or so, that'd be almost an 80 point move. That'd be pretty good. But that's getting ahead of ourselves. Let's see how this very short-term action plays out and go from there. All right. Serial Trader signing off.